here. Who that, Martinez?
Yes, sir.
What's going on, Martinez? How you feeling?
Not bad. Just another day at work.
Yeah, all right. All right. James, how you feeling today? You with us? Miss Kimberly, how you doing today?
Good morning. I'm doing great.
Okay, with me. Miss Selena, how you feeling?
I'm good. What? How are you?
I'm about to get bigger and better today. I got a lot of things I'm working on. I got a couple of interviews coming up this weekend. So, make some more content, show my face, people hear my voice. So, all right, here we go. Don't nobody got any questions? I'm gonna run through this and then I'm gonna go over something new for a few people. This is the morning come up, Monday through Friday, 9 a.m. Central Time. I go over how to do private banking, and then we Q&A over that, introduce new information, and there's no personal information required. There's no minimum to start, and it's same day results. What does that mean? No personal information means you do not have to give me any of your personal information to do this process, to learn this process. No minimums to start your account means after you have access to the class, after you have access to Wealth Builder and everything, you signed up, then you'll be able to start getting the results that we provide in the class. Same day results means soon as you start, soon as you get to see exactly what we do, how we do it, and game time, right? For those who are not already inside the classes. Folks Finance. Can anybody tell me what's different about this home screen?
The
The
total,
value's
the
up.
total value, the total value went up.
Okay, all right. That's what we look for. That's the first thing we're looking at. Why are we looking at the total value? Well, I know I got some heavy hitters on here. I got some people that know what's going on here. What's so important about the total value lock?
To show you how
It's
much
a,
more money that came in.
the potential to earn more.
I can't. Hold on. Wait, y'all. Not everybody speak at one time. Hold on. Okay, Garland, you at work? It's okay. It's all good. You here with us? Garland, type it in the chat if you know. What's so important about the total value lock on folks' finance? Because we've seen this TVL go from 63 million to 48 million, right? So the fact that it went down means money came out. The fact that it's going up means money's coming in. How do we benefit off of that using folks' finance? CJ, how do we benefit when the TVL goes up?
Say that again.
How do we benefit in the class when the TVL goes up? James, good answer.
Um, that means it's more. We be able to make more. We able to make it money on the uptrend and the downtrend.
Okay, so that's one way. That's one because there's several ways that we all get paid when this number goes up and when this number goes down. CJ, you we get paid because we have two loans, right? We got our uptrend loan and we have our downtrend loan. Uh, James said more money in the pool. Okay, so there's more money available for everybody to use. There's more money available that we have access to. And Garland says more money in the pool means higher liquidity we have access to. Exactly the same thing, right? So the first thing you do is you go to folks finance. Why? Because this is where we create our private bank accounts. This is where we set up the whole strategy. And once we get here, we can see how much money is inside of the platform today, right? We'll get to see how much money is in the platform today. You go to folks finance, launch app. For those already in class, you should already be connected to the platform. Connect wallet to the top right hand corner. Once your wallet's connected, Bam, you'll see, your balances. You're going to click on Folks Finance, top left-hand corner, and it'll give you your wallet overview. So my current wallet overview says my wallet balance is $12. I have a total deposit of $75. I have a collateralized $40,000, and I borrowed $27,000. For all of the pocket watches, for people that just want to go straight to the dollar, straight to the money, the actual amount of cash that I can take out of here right now is the wallet balance, the deposit money, and the difference between the collateral and the borrow. So let's just say that's what, 13,000. So I can take out $13,000 from this account right now as I have it, the way it's running. That's what these numbers mean. That's what it says. The deposit account is simply a place where you put your money and you collect compound interest every 4 seconds, like the rest of this. Okay. So if you watch the numbers, you'll see them compounding. You'll see the zeros start to kill and the pennies will start to roll in, then the dollars, and you just build it up. So that's how that part works. Once you deposit, like right here, I have $75 gaining 14%. $75 gaining me 14%. You don't get this in the bank. You won't get this in the stock market. There's so many places that people put their money where they don't get returns like this. This is one way that we make money using Folks Finance, simply using the deposit account. This is the safe bet, basically. You just put the money here and let it stack. Any questions on the deposit while I'm going over this part? Anybody? Okay. The next way we make money, we create our own loans, right? Once you create yourself a loan using Folks Finance, name the loan uptrend, downtrend, make sure the loan is general. These loans are assets. What do assets do? Assets put money in your bank account. Assets create cash flow. Assets produce income. So because we have these loans, we're able to manage these loans. By managing these loans, we have collateral. So this is $18,000 in collateral. These are dollars. For those who know, USD coin is the digital dollar, basically. It's a dollar in digital version. So we put the dollars up into the account. Now it's collateral. Because we have this collateral, we have been able to borrow $14,000 in a different asset. So we got 18,000 put up, and then we were able to borrow 14,000 in equity. And I tell people this all the time. It's just like your insurance policies that people push, right? The cash value, you create it, and then you pull the money out. You pull the equity out. It's just like real estate. You get the property, you pull the equity out. It's just like your 401k or your retirement account. You build that thing up just so that you can use it later. But remember, you can still pull from it now. Most people don't because of penalties and taxes and all of that extra, curricular stuff that they got going on in the system. With this, like I said, back to the class. No personal information is required to do this stuff. No minimums to start. You can do this with $5 or $5,000. And you can do it the same day. You get same day results the moment you're ready to pull the trigger, right? And then for everyone that's in the class, that's with me right now, just a few people, we got same day results, right? Just on that one. Same day results, everybody?
Yes.
Yep.
Yes.
Okay. I would like to ask something. Any cons? Let me ask that real quick. So I went over the deposit area. Basically, this is the safe bet. I went over the loans. We manage the loans so that we can make money. The most important part about this is the liquidation margin. If the liquidation margin goes to zero, you lose all your money. And I say this all the time. And just while I'm thinking about it, this is not financial advice. This is for educational purposes only, which is why we have a class available to help people learn this and put it together. But real quick though, a few people, somebody, anybody, what is the negative about, what we're doing that you would like to see different? Any negatives, any cons? I'm just curious because I got some cons myself. I just want to see what other people don't like about how things work. Like you wish you could do this or you wish you knew this part. Anybody?
Well, my only thing was my experience a week ago when the market was crashing, not being able to stop it, and panicking in a way, seeing the liquidation go from 9 to -4. Uh, I was able to stop it, but it was the middle of the night, 1 o'clock in the morning. I could have been sleeping. If it wasn't for me going to the bathroom, I would have never found out because I check every time I wake up. But I would have woken up to a washout. Basically, I would have lost all the money.
So I actually been in that situation before. Now think about this, because that's a negative for me too. If you don't catch it, right? If you don't catch it, it's gonna say negative. That's actually a bonus. That's a plus. That's a benefit that it says negative instead of zero, right? When you think about that.
Right.
But also, let's just say it does go to zero. Let's say your uptrend goes to zero. That means the asset is basically becoming more worthless, right?
Right.
And your downtrend is becoming what? More valuable. So either way, like this is what I talked to Dennis about. Like either way, you're gonna win and you're gonna lose, but you don't lose until what? You cash out, just like you don't win until you cash out, because at the end of the day, this is what? Investing. And this goes through everything. When you put your time and energy into something, you don't consider it a win or a loss until you get that, that dividend back and you measure it, right? If it's not fulfilling, then you feel like it's a loss, right? But if it's fulfilling, then you took the win. Same thing with this, right? We run these loans 24/7 to be able to take advantage of them daily. And we're not always going to be on top of it 24/7, because I mean, we can't sit at the computer literally 24/7. Like James just said, the mobile version sucks. Personally, for me, I like the mobile version. It's convenient for me. But I mean, just like anything, if your signal's down, you don't got Wi-Fi, that can be an issue. So Manny, I agree with you with that one. Until they fix it. But I think they kind of did fix that though with the lending pools.
Right. Yeah. That's It gives you more options, so it's just a good thing.
Yeah. So I mean, but they were still a work in progress. Like I said, Folks Finance has been around just as long as I've been actually doing the strategy. So like I'm growing up with Folks Finance right now. Folks Finance is almost about 2 years old too, I think, or a little older than 2 years. Anybody else with a pro or with a con, something negative they don't like? Nobody.
Yeah, I'm still learning myself. I have, I got money in it. I've grown it. I was with you, I think last weekend, and you're gracious enough to give me your time. So I started, as you saw, I started with $200. Now I'm up 700 $700 in collateralized and 485 in the total borrowed. But I'm still learning, so I'm a little, confused on the terminology a little bit.
Okay.
So I'm just taking it slow.
All right, well, you with us, David. That's all that matters. This puts you ahead of the game. That's the main thing. Learning this information puts you ahead of the game. You the bank now. So you see how the money just coming to you. Like another thing people understand, the total value lock is the account we share. We all got money in this account. Right now, we all got money in this account, whether it's $10 or it's $300,000. So because you have money in this account, you can profit from that market. That's a market right there itself. That $54 million is a market all to itself. So when people talk about the market, like most people are not speaking in it generally. I speak generally. When I say market, I mean every damn thing that can be bought and sold, right? Everything that can be bought and sold. So your time is included in the market because people trade time for money. It's all about what you want to buy or sell out the market. In this case, we buying and selling this right here. We trading, lending, borrowing, managing assets with Folks Finance. And there's $54 million in this market. I currently have 40,000, market share. I had 63, but had to take some money out. What was I about to say? So nobody else with a con? Anybody else?
What I would like to see different a little bit, not major. It's just that when I'm at my desktop and I leave my phone in the other room and I gotta make a transaction, I gotta, go run and get my phone in order to submit the transaction. So
Uh-huh.
just like they got the Power Wallet, tied in on a on the board there should be some kind of option that we can actually complete the transaction on the same screen.
So they do have a Paraweb version. I just prefer to do the confirmation with my phone, right? It's just me. It's just how I prefer it, because a lot of these platforms in crypto, they work the same way, where you need the wallet to connect to the platform to get access. So I just prefer to use the mobile connection. But not all of them, but most of them, they'll either have the web connection or they'll have these, like the MetaMask. They'll have extensions. So, and I've actually been racking up on my extensions. I got MetaMask, I got Rise, Venom, Nami, I even got Free Name, I got Phantom, I got Chat GPT extension, like looking to getting more extensions. And we are making an extension for the site. For those who are already on the site and have their membership, you'll be able to come to the site to be able to do a lot of the transactions you guys learn going to Mexi or getting your wallet here or going directly to the classroom. Because like a lot of people that are still coming to class, I'm being gracious enough to give them access to this Google Classroom, right? But most of them are just signing up here, because eventually, once the NFTs are gone, then they're going to be coming to you guys to get into this classroom, and then all the other people that's just coming here are going to stay getting the information provided here. So OGs here, new people here. This is how you guys will know as we get to building the community, like who's been in the actual Google Classroom compared to who's on the website.
Next step is a security for you. You need your phone to be close to your computer in order to make it work. That goes to security.
Yeah, that's why I love it. That's one of the main reasons why I love it. Folks finance, Algorand, the blockchain, crypto in general, I like it because the main three is faster than all of the traditional ways that we use to make money and communicate right now. It's faster, it's safer, and it's cheaper, right? Like right now, we're focusing on the money part of things. Most people don't focus on the technological part, the behind the scenes, which is what gives me the edge and the advantage. So this information allows us to process our financial transactions faster, safer, and cheaper than actually using the current system, because the current system is taxing on everything, including the time it takes to process the transaction, which is what pisses us all off. Because if I make a transaction now, there's no reason there should ever be a hold. There's no reason there should ever be a hack. But for some reason, we still have all of these vulnerabilities. But those decrease extremely when you start using cryptocurrency and blockchain technology, which is why I'm teaching this to people. Do I got any questions? I'm gonna shoot at these lending pools real quick. Do I got any questions?
I have a quick question about the NFT. I've tried several times to get it directly through the link that you sent me, but I can't seem to get it to work on mobile. I won't be home until Wednesday where I can use a PC. I've been doing everything on mobile.
All right, well, James, I got you. Let's do this real quick. This is what I want you to do. Post this in the classroom for you so you can see it. What I want you to do is I want you to post your comment with your wallet address on that post in the classroom.
All right.
Okay, that's what I want you to do. And then make sure you are opted into the asset. That's the main thing that you need to do. Make sure you're opted in. that you're available to receive it.
Okay.
And you're going to need five. You're going to need 502 algo in your wallet.
Okay.
So we
I'll
have
do
25 left. Yep, 25. Okay, so we have 25 NFTs, 25 class tokens left. These class tokens are one of the streams of income that are part of class, right? This gives you access to more things in the classroom. These NFTs go to the Google Classroom. Everyone that's holding these NFTs will get some voting rights, different things as we continue to build the class. Like these give you a solid spot. Also, for those who bought more than one, you can sell these to other people for a profit. So right now, it's currently worth 500 Algorand. You can buy this for 500 Algorand today, and then tomorrow, or right after you buy it, you can resell it for 1,000 Algo. You can come and post it back onto your own Algo Gems account and resell it. And people will make offers, and you can accept the offers or decline the offers. And you can sell them manually, like hand to hand. Like I can send it straight to you. You can send me the money depending on who you're doing business with. We don't have to deal with any middleman now. This is the whole thing about this. You become the middleman for yourself. So I appreciate everybody that does have these, because this is also what produces more income for us with the liquidity pools. For those who have their liquidity pools set up, I'm gonna get to that in a minute. All right. So this is what they graced us with. It's been about what, a week or two? It's been about a week or two for these lending pools. So if anybody is in the classroom and you have not set up a lending pool, if you have not set up a lending pool, you have done yourself a disservice. This lending pool was paying what was it? 500% around when it first came out, 500% APY.
Yeah.
And most people look at these APYs like, how can they sustain these APYs? So for one, the APY decreases as the TVL goes up, just like a liquidity pool. So that's good to know. So you understand that it's balanced out between everybody involved. Also, there's money coming into this lending pool 3 different ways. Money's coming in and you're getting a piece. You're getting a percentage. So what I've been teaching for the last year or so has been how to set up the private bank and get that lending money, how to set up the liquidity pool and get that swap fee money, and then how to farm and get that grow money. This is exactly what I've been teaching for the last year or so. And they just put that shit in one button. So this is how much technology moves, how fast this is about to take off. So whoever don't catch it is gonna, like a lot of people that I follow say, oh, there's only going to be a low class and a high class. There's not going to be any middle class anymore, right? Because they're going to make that gap so damn big. Well, it's obvious. So if you're not, taking the knowledge and applying it, you're going to miss out. Like, this information has been readily available on my YouTube, right? On my YouTube, it's on my Facebook for anybody that wants to come and find it, right? Anybody that wants help. That's why I created the classroom. And I clearly explain how to do this. This is very important, very critical for anybody, no matter what you do. But the lending pools currently, right now, for those who are not in the lending pools, right now, putting your money in the lending pools, you can start making 100% interest on your money, right? You don't have to do anything else that I've talked about up until now. If you just focused on the lending pools, you could put your money in here and start making 100% compound interest, right? That means if you put your money in here and you leave it there for a whole year, you will get 100% return, or whatever the current APY is, but you'll be getting the current return every day, all day, based off of these transactions. Everything that we do using this classroom and this strategy is we get paid off of transactions, all of it. We don't care about the buying, the selling, or the price. We only focus on value, accumulation. That's it. We just want to see our numbers going up. As long as our numbers are going up, we're in the money. It doesn't matter. Like, for example, I want to see my borrow balance go up. I want to see my debt go up. Why do I want to see my total borrow go up? The more I borrow, which means the more I'm able to put in my pocket and I can cash it out, which means it's the same amount I can reinvest into my collateral. The more collateral creates the more borrow. That's what pays me when the market moves. So I want to keep beefing up this collateral every chance I get. More collateral, more borrow. The difference between the two, which is my equity, my cash balance, what I can actually pull out and go and do something with, that 13,000, the more I borrow and reinvest, my equity grows, my cash balance grows. That's the why we do this process. That's the whole deal with creating the loan and working the strategy. You get to just accumulate more and more equity from the total value. So this is where the money's coming from. If anybody's curious how we're able to do that, that's where the money's coming from the market. Lending pool.
I have a quick question.
Go ahead.
When you're adding money, and I see sometimes you swap it out, can you just hit add, or is there a difference when you swap?
So when you're adding, but it says swap and collateralize?
Yeah.
Okay, so for example,
Like if I don't have enough funds to just add here, then I hit swap, which one is better?
so if like right now I have $7 in USDC collateral. USDC is the collateral for the downtrend. So if I want to, I could just add this $7, right?
Mm-hmm.
But if I do not have USDC, then I would swap and collateralize because I do not have the collateral I need. So I will swap out my algo. I would swap out my algo and turn it into USDC. Then it would go into the collateral as USDC, beefing up the liquidation margin.
Okay.
You got that, K Rich?
Yes.
Okay, cool. Any other questions? About to check on this lending pool. Any other questions? Mo Biz, you with us?
I have a couple. Like I said, I'm still learning, but I was playing around with the withdraw, but I never saw where am I withdrawing to.
Okay, so every time you add money, it comes from your wallet balance. The wallet balance is at the bottom of the screen. You just scroll down to the bottom half and look for wallet balance. The wallet balance is your Para wallet. It's your DeFi wallet, or your it's your DeFi wallet or your Para wallet or any Web3 wallet that you have. The money is always in your wallet. It always starts in your wallet. Once you connect it to a platform, this is where you will send the money to the platform. So if it leaves your wallet, it's in the platform now. So make sure you check the platform for the balance. When you take money out of the platform, it goes back into your wallet. So you check your wallet balance to make sure that the money came back out. This is why you are then responsible for confirming your own transactions. So if you're sending it, you should be able to check where you sent it. If you know where you're receiving it, you should be able to check to where you're receiving it. And as long as you know money comes out of the wallet to the platform, from the platform to the wallet, you know exactly where you're looking. You got that, David?
No, I'm still confused.
How are you confused?
I don't know, man.
I'm gonna say it again for you because I don't want you to be confused. I want to make sure you're not confused.
All right,
You currently have money in your wallet, the Para app, the Para wallet, right?
Para app, yeah, I do.
Okay, so when you put money into your folks account, the money comes out of the wallet and goes into the folks account. So I took $75 out of my Para wallet and I deposited it to my folks account.
Okay.
Do you get that part? So when I withdraw the money, as you can see right here in the transaction box, it says you will no longer earn the following APY on the amount you withdraw. So when I take the money out of the folks account, it goes back into my wallet where it's just sitting there, which is why most people right now, prime example, let me cover this real quick. The current person who's investing right now, right? The average investor or the beginning investor that just don't know nothing. All they think is, one, they're going to be investing in something like Forex or options and they'll be able to get it right away and make a lot of money. And it's possible, right? Depending on how bad they want it, how much they put into it always. Or they think they'll be able to just put the money here, let it stack, let it grow. They're not even thinking about the negative, the downside, because markets don't just go straight up. They go down, sideways, roll around, jump, twist, all of that.
Yeah.
Because I look at the market the way I look at it, this is the fact right here. This is a fact. And I just want to track it real quick for class and for the video, for everything. This is since that drop. I know a lot of y'all been with me since we got that drop the last time, a few of these drops, but let's just say this drop that we got on the 10th, right? 2 weeks ago. So anybody, how many people have been with me about 2 weeks? Who been with me 2 weeks or more?
Manny.
Me.
I'm going. I think I'm going on 3.
Martinez.
Okay, Bo Biz.
Manny.
CJ, I know you've been with me. Manny. Okay.
I have.
Kim. Okay, yep. Kim been with me.
Martinez.
Juice, you just got here about a week ago.
About 3.
Okay. All right. So I appreciate y'all. So this is the thing. So for those who've been here that long, look at this. When this drop happened, this was that 25% drop. I remember now. Now I remember clear because I made 2,000 off this drop. It was 25% drop. The market dropped 25% basically. So for those people that are not in this class, and this is for if you invested in stock, real estate, any investments that you currently have. When you make the investment and the market drops, you don't lose money, you lose value. And most people don't have a high tolerance level for losing value. They don't know how to control or handle value, equity. So when the equity drops, they get nervous and they panic. People that run $1 million, $1 billion companies understand that. So when that value of the company drops 2 billion, it's not a panic situation. It's a rebalancing situation. It's a readjusting situation. So in this case, we already did that work. I already did that for y'all, explain that to y'all. So y'all understand when the market drops, somebody's selling and we're going to take advantage of that. So we caught that 25% drop in class and we made money, right? Y'all drop some 4s in the comments. I don't want all y'all trying to speak at the same time, but everybody that's been catching them downtrends, drop some 4s in the chat. Make it easy for us. There we go. Let's do some confirmation right there. Bam. Right, we making money every 4 seconds while the market is dropping. We're still making money. Okay, but the average investor, they lost, they panicked, they sold out. They start seeing it drop, they sold the rest of it. Said, I don't want to lose no more, and they cashed out. But we've been riding this wave. We got these assets, right? So when that 25% drop happened, oh look, we got money on the table now. When that 25% drop happened, we cashed out.
Or they may win. I don't fucking know. I know my shit landed with me, and it was a whole thing.
All right. So, like right now, I could borrow $12 from my uptrend because the uptrend is pumping right now. So the uptrend just paid me $12 since I've been on here with y'all. It just went up $5 more, right? This is y'all seeing me make money for those who ain't seen it. All right, just pull 12. Now I'm pulling another 5. Bam. And it's steady going up. So this is the uptrend printed. Like I was saying, though, so not to lose my point. The market dropped 25%. It went down. A lot of people lost their money. They lost their shirts. They lost their house, whatever. We cashed out in class. But now, since them 2 weeks, after that cash out, and these are facts I'm giving y'all. After that 20% drop that we cashed out on, the market still went up 30%. So you know we cashed out off of that because we still in the game. And in between time, we also took all of these uptrend, downtrend cash outs as well. Am I right, class?
When you in order to take full advantage of that drop, do you transfer into the downtrend to take? Does that give you more from it?
Try to reword your question for me.
Okay. If say we noticed it's dropping, would it be a smart move to take money out of the uptrend and put it into the downtrend loan? Would that be more advantageous for that drop?
So just so I'm making sure I answer this correctly. So when the market is dropping like this, you're asking me, should we take the money from the uptrend and put it into the downtrend?
Right. If you notice it in time, or if you saw it coming.
So no. When the market drops like this, you are already in position, right? You're already in position because you got the downtrend loan. So bam, you just wait for this to fill up and you collect, right? You got that part? You got that part, right?
Yeah, I got that.
Okay, so now when that happens, that means your uptrend loan is going to be losing some value. So this will be going down. So if anything, you're going to be adding to this from the other side if it reaches a point that you can't take. You understand that part?
Say that again.
If your downtrend is making you money, then your uptrend is basically, if your downtrend is gaining value, your uptrend is losing value, right?
Right.
Okay, but if you're making money on one side, you take that money and you rebalance the other side. Or, like I've shown people, you can just keep riding the wave. When you get more comfortable with this, this is what happens. Once you get more comfortable. Oh, shoot. So everybody understands. I said I took 2,000 profit off of this, right? So bam, as soon as I took that 2,000 profit, what did I do? I instantly took the money and put 500 on the uptrend, right? And then I took the 2,000 and I took the other 1,500. I think I took 1,000 and I put the 1,000 back on the downtrend. So I just took the money out of the loan and put it back in the loan, but I put it in some of both. You following me, James?
Yeah, I got you.
Okay, so now I got my profit. I put it to work now. What else am I going to do with it? Sit on it or spend it? So I put it back to work. After I put it back to work, the market shot up. So now I'm collecting off of the new assets that I put to work, right?
Right, I got you.
And now
it's the same thing I said. I think I'm just saying, like, if you're talking about taking profits, I'm talking about pinching off the losses and putting them into the profitable side. If the downtrend is being profitable, then you want to put more money in that. So it's kind of the same thing.
Okay, so yeah, so it went like right now, the uptrend is pumping for the most part. As the uptrend is pumping, you take the money from the uptrend and you put it back on the uptrend and let it keep working. You take the money from the uptrend and you put it back on the uptrend and let it keep working. But then you have to know how to work this so that when it gets under 6%, like I said, this is why this is not financial advice. So this is for educational purposes. I tell everybody in class, once your liquidation margin hits 6%, add some money, rebalance it, push it up. Obviously, me, I'm going for the gusto. You see where mine is. So this is, it's really up to you. That's why I just want people to learn how to work it. Once you get that, I can add money right now and push the liquidation margin to 10% and then just let both of these be at 9 and let them balance out from there, like I do sometimes, right? For example, when I sign up these few people that I have the call with today, I'm gonna put this money into my Focus account and I'm gonna put it into the uptrend first, borrow from it, and then put the rest in the downtrend and let it work. These are assets, so I'm not concerned about them going anywhere. I created them. So I'm not concerned about that. My only focus is to manage them.
Right.
All right. So I hope we got some clarity out of that one.
Yeah, if your uptrend and your downtrend accounts collateral are close to even in value, like yours are, they're not real far apart. But if they're close to even in value, then you don't really need to worry about it, right?
Correct, because whether it's going up or down, it'll be pushing you out around the same amount that you can rebalance.
Right. Okay. Yeah, I need to level mine out.
Do I got any other questions? Any other questions? Anybody? Okay, so this is the private banking. This the morning come up. I appreciate y'all for coming. If you don't have your NFTs, James, I'm going to respond to you in the class in a second so we can get that squared away. Make sure you comment with your paste your wallet address right there.
I will after the class.
Okay, so and we got 24 after James get his. There'll be 24 left. That's done. Follow me on Facebook. Follow me on YouTube. Obviously, we on YouTube now. What else? Did I finish explaining this? Oh, yeah, I did. Basically, we get paid every candle, though. Obviously, we took the 25% drop and got profit, and then over the next 2 weeks, we recoup that same position, basically, as far as the asset goes. We back in the same spot as far as the asset value. But we did some business in between that time, which is the big difference between trading, right? If you were a trader, you had to bet that it went down just to make money. What if you went that it was going back up? You lost. It was over with, right? Or imagine if you did say it was going down. Now it comes down to how much did you bet on it? Did you say, oh, I put $1 per pip, a penny per pip? Did you make a $500 trade? Right? That'll determine your returns if you did get it correct. With our strategy, we always right. If anybody get that, we always right, because I know for a fact the market only gonna do two things. It's gonna go up, it's gonna go down. It's gonna go up from buys, it's gonna go down from sales. Those are facts. Those are the way this works. So just using the facts, we gonna make money. I don't got time to look at the chart trying to, I just don't feel like doing it. It's just me though. I just don't feel like trying to set up these lines, and I don't like it personally. And I get how valuable it is. I definitely do. I respect the people that took the time to learn how to do it. I just don't like it. And that's how I found this, and I've created this strategy to do it this way. So while they're getting set to, and I still trade here and there though. Like when I watch the market, I can trade using my liquidation margin. I can make a trade. If my uptrend loan is going to keep saying, if it's keep printing me out money, prime example, the uptrend keeps printing me out money. If I want to, you can see it right here. This is the 15-minute chart. And what we got right here? This is the last hour. Let's say the last hour. 15-minute chart right here. That means we're getting paid off the uptrend loan, uptrend loan, uptrend loan, uptrend loan, uptrend loan. If I know I'm pulling from my uptrend loan constantly, if I want to, if I'm in the mood, if I feel like switching money over, I can go to one of my accounts and trade. Like right now, since I've been on the call, I could have put in a trade for the uptrend to go long, and how would have been making money. And I know I'll be making money because I'm making money from my folks account. I'm making money borrowing from the value. So the trade is just like extra to me. And that's why I'd rather do this than trade, because this is for sure. This is way more for sure than trading. You can do this and trade, which is an example that some people do. Like you put the money in here, borrow it out, and then go make the trade. So now it shoots up both ways. So your money working two ways for those that's skilled enough to do that.
It's kind of like hedge and trading, I guess.
What
Yeah.
is
No, it's not hedging though. It's not hedging really. So hedging is taking place right here. This is where the hedging is taking place. We get the bet up, we get the bet down. What I'm saying is we getting a triple dip, right? We get the double dip here off of the uptrend, downtrend going back and forth. We get the triple dip because we take the money from this and we can go and trade up or down too.
Oh.
So you're hitting both ends of it.
Oh, Mexi?
Exactly. Right on Mexi, baby.
What's the repay about, that button over there?
The repay is how you repay the loans off. You do not have to repay the loans. I tell people that all the time, just so that we're on the same page. This is if you repay the loan, right? And let's say you don't have no money to repay the loan and it's about to go down and you need to boost it up. Your last resort, this is just the last resort in case ain't nobody ever heard me say this. You can use the actual money that you got stacked up, your collateral, to repay some of your loan. For example, if I wanted to repay 2,000, it would boost the liquidation margin up to 6% right now. But I would lose 2,000 of my downtrend collateral. But I would increase my liquidation margin, which also increases the, life of the loan, basically, or the liquidation of the loan. That's what the repay button is for. I don't really mess with the repay.
So in other words, you'll wait until 10% to repay, so it can.
No, I don't repay unless I want to take out a large sum of money. I don't repay. I'm deposit only, borrow only, collateral only, borrow only. I might take out of here twice a month. Like I just ran it from what 30 something back up to the 40s, and then I ran it from the 40s up to the 60s, and then I just took some money out to take care of something, and now I'm about to run it back from the 40s to the 60s because I got to get to 100,000 before the end of the year. That's what my plan, my goal is here. Like, and I only say it again.
If you take out, then you're banking. If you leave it in there, then you're investing.
Say it one more time for me, James.
If you're taking out, then you're banking. If you leave it in there, then you're investing.
Exactly.
Everybody's margin is different too.
Everybody's account is going to be different because people add money at different times. People take money out at different times. People rebalance at different times, and people have different amounts of money. Also,
I just went up like 10-17.
Right. You see, because you got a different collateral balance. It's all different collateral balance is going to show differently. What was I just about to say? Yeah, but everybody's account is going to be different. This is why you have to learn how to do this for yourself if you're going to do it that way. Because you need to know, like right now, I'm just talking to y'all, but y'all see how this works. And some people, and a lot of people gonna have to crawl before they walk. They're gonna have to build their accounts up. I started with $300 the very first time, right? And then when I lost money and I started from zero again, I was back. I was like, damn, man, I was mad I started with $3,000 when I started back up. Imagine that. People can't even start with that. I was mad because I'm like, man, I know how fast this money gonna grow. Let me hurry up and just put this in there and flip it and push it up. Because I could take the 3,000 and turn the 3,000 into 6,000, 7,000, right? I know how to do that now. So this is what I do. Like somebody just commented, little key man just commented right there. He said, uptrend. Right? I'm not the only one making money, y'all, right? Everybody should be seeing their uptrends going up right now. Everybody, as long as they paying attention to it, or when they do check it, it'll be up because it's been going up for over an hour now.
It sure has.
I made $10 while you were talking.
Right, like since we've been on the call, 2%.
Yeah, likewise.
Nice little 2%, probably a little more than that because I know I've been since earlier. Let's just go here. That's about 3%, right? Yeah. Look at that, 3% just this morning, just right now. And that's off of the asset. That's not the money that you're getting from borrowing. That's what I want people to get. Like you automatically get the double dip. And hearing myself say that shit, that's crazy. You automatically
That's crazy right there. I like them numbers.
You know, so like, and look, all you're gonna do is see my like right now. I'm about to push this up, and I'm risky. Like I keep telling y'all, so y'all are just gonna see me adding money because I'm pulling it right back out.
Ooh, I need to check mine.
So I'm gonna show y'all this little trick. We can get into it later because I know a lot of y'all still new. But here goes something that I'll do right here. Since I know the uptrend is pumping, right? I'm going to take, let's do 2,500. Let me see. Yeah, I'm gonna take basically $300 of my algo in my collateral, and I'm gonna turn it into USDC. I'm doing this for y'all, so y'all come back and watch this or ask questions about this part, or go back and watch this part before you ask questions. I just turned my Algorand collateral into USDC in the uptrend for those who've actually been seeing this and wondering, because I know a few people that mentioned it to me. So the reason I did this is because when the market is dipping, I can basically turn my uptrend off a little bit. I can slow it down a little bit, right? And this comes in handy because I got such a big amount that I want to do that. But when I make that decision, it creates more money for me to borrow, right? Like I didn't change the amount of money that I have in my collateral. I just moved it from Algorand to USDC, and that increases the liquidation margin, that transaction, which means it produced some more money to pull out.
I think I did that at least 2 times myself on that side.
But now
kind of lost a little bit.
It hurts you though because it slows your account down as it's appreciating, but it kind of lets you pocket the cash. Okay.
Yeah.
Who said they're a little lost? So I can repeat it one more time.
That was me. So okay, so how I heard it was, are you going to collateral? You took from your collateral. I see 2 collaterals on one loan, right?
Correct.
Okay, so which meaning that what this is the uptrend? Okay, so you took a little bit from your your algo and you put it into your USD, or you vice versa?
You can do either one, but yes, I went from algo to USDC.
Okay, so then after that, you added from one collateral to the other, and then you repaid. Then you borrowed from it.
No, I didn't do nothing else after that but borrow.
Okay,
I just
then you
did
borrowed
this.
from it. Okay.
I just swapped out $300 and the liquidation shot up on its own. See, all
Yeah.
I did was swap.
I'm gonna do this.
And it's still, and I didn't do the swap, but it's still going up. So, right, you gotta remember.
It takes from your uptrend now, but it's not going to stay uptrend forever. It's going to come back down.
What do you mean? Why do
If you took it from your uptrend side and put it to your downtrend side, it'll grow when it comes down. Right?
Yeah, but it won't grow when it comes up, which is why I do not do that. I kind of get what you're saying, I think, because a lot of people have asked me that before. When one of the loans are I don't get that, Riley, because I never did that actually. So just look. So you never take the money out of the loan to put it in the other loan, right? Don't take money out of the collateral from this loan to put it in the collateral of the other loan. That's not part of this.
That's what I thought you was doing.
No, that is not what I'm doing. I'm taking the money from the borrows and adding to the collaterals. The only time you take out of the collateral, that's what I consider a withdrawal. When I take the money out of the collateral and put it in my pocket and transfer it to go do what I need to do. Those are my last decisions that I like to make. I don't want to take out the collateral. I only want to add collateral. I make that very clear to everybody. So if you're doing anything other than that, you deviating from the plan. So you're supposed to be stacking collateral unless we went over this otherwise, and you're somebody that wants to use this strategy to pay bills and use it a different way because there's multiple ways you can use this. The main thing is learn how to work the platform. But do not, unless you want to, because you understand what you're doing at that point, take the money out the collateral from one loan to put it in the collateral for the other loan. Just let the market do what it do, right? You clearly see this is a prime example of what the market will do to you. And last 2 weeks, most people don't invest at all, so then they get out the game. But people like me or that are more experienced than me, I'm in this thing for the long haul, for the ride, for all of the ups and downs, the stomach dropping moments, all of that, because I want to be there in a position for the golden moments. But clear example, the market, the asset dropped 25%, and still over a 2-week period, it recovered plus some. But in the meantime, because I understand what's going on, we were able to take some profits and gain some more equity and some more value before that. So imagine this. Let's say you got in right after the drop and you got in the class right here. Bam. So you still made 23% appreciation on your assets. Your account appreciated 23% over a 2-week period. That's one way you made money. Also, using the strategy, you've been able to take profit off of this downtrend, up, down, up, down, up, down. You've been adding to your assets. So if you started with 100 assets here, you caught that uptrend. You've gained more assets. So let's just say you have 150 assets. Then your market went down. You caught there. So now you had 200 assets. Then you went up. Now you have 300 assets. Then you went down. Now you have 400 assets. Then you went up. Now you got 900 assets. Then you went down. You got 1,500. You went up. Now you got 3,000. You went down. You got 10,000. Now you went up. You got 15,000 assets, and you started with 100. And this is what I'm showing y'all. This is probably what a lot of people are missing because y'all looking at the money, the dollars. Forget about the dollars. Count the percentages. I have 139,000 assets right here. Think about how hard it is for people to get invested in one single asset and have it produce income. This is 139,000 assets that produce income that cost less than $1. And it's not the only one. So get y'all some, get in the class, tell the people, share this video. This is a testimony video for everybody. It will be on my YouTube under all the other live classrooms. Bam. Right. And for those who need to keep up, catch up, y'all can come back and check these or just make sure you in the classroom so you can get the link. The only one. All right. Any questions before I click this red button? Got a few more minutes. And it's my birthday time, 10/16.
Oh, happy born day.
Happy born, man.
Happy born day, young God.
It's my birthday time. Birthday to you. Not my birthday, my time. Birthday time.
Man, look, man.
I'm just kidding. All right, come on though. Questions.
All right, so the question was, so any, I don't know if I can hear or whatnot, but do you know if the glitch working?
Do I know about the glitch work?
Yeah, because I've been doing it.
From the phone and the laptop?
Yep.
Yeah, I do it all the time. It's part of the strategy.
Okay, then bad. Well, look,
yeah. I mean, as long as you're doing the strategy, you're gonna get it and you're gonna notice it. Like, hold on.
Yeah, right. You know what I'm saying?
Yeah, but you gotta use both. You gotta use both, though.
Yeah, I've been doing both.
Remember, I'm gonna give you a tip since you're following me right now. Because we're using blockchain technology, all of the transaction is information. So the information is sent on the blockchain from one computer to the next computer to the next computer to the next computer all day 24/7. That's how they keep up with the information all on the blockchain. It's basically a whole bunch of computers keeping the same information rotating, right? Now, your phone is a computer. Your laptop is a computer. They can retrieve the same information, but they cannot retrieve the same information at the exact same time like people think they can. There is a delay, relay, pause because the information has to be transmitted. And with the blockchain, it has to be processed. After so many transactions, then it closes, sends the message, closes, sends the message, closes, sends the message. So by the time it hit you, you was able to pull a fast one and then do it again. Because
Do
the
it
message.
again, like I just did.
So that's part of knowing how blockchain works. But this is just the beginning, though. We finna take these people down, right? We're gonna take this account down, and then we're gonna go take the other accounts down for everybody that's with me.
Dangerous walk, boy. Your dangerous walk.
I told you, they let the right person figure this out. I promise they did. Any other questions, though? Any other questions?
Yeah, I do. I was trying to wait to the end because, of course, I'm still fairly new, so I'm gonna ask more of the embarrassing questions. So I know that we have been talking about the uptrend, downtrend, and I asked for like real world scenario type of questions. So when I understand the uptrend, well, when you say uptrend, you look for the 10%, and when you get there, that's when you borrow. Is that the same concept for when it's down, for when it's on the downtrend, when you all call it downtrend? Am I looking for above 10% and then I'm borrowing?
Correct. That's correct. That is correct.
Above. Okay, so it is still above 10%. So the exact same thing, just for the different trend direction.
So you work your loans the same way. With the liquidation go up, you borrow. Like right now, I'm kind of a little bothered that I didn't call a trade today because I was rushing to get to y'all. I didn't even think about checking to see if it was pumping or not. I just hopped on it. I didn't even look. Like I'm making money right now. I didn't even know. I could have been ratting me a trade, but it's okay though. That's why I like this though, because I'm already in position to make money. Like you got to think when you trading, if you put $10 in, you're only gonna get a certain amount of money for how long you let it ride, right?
Right.
But with this, I ain't got to worry about that. I'm just letting it go. I'm just letting it's gonna pay me, right? I actually get to make the money and keep the money.
Okay, got you. And then I had another question as far as when you were talking about taking money out. So I had took notes. Basically, you go to see your loans, you pick either the uptrend or the downtrend. You scroll down to the repay, and you want to max that out. But it gives you the option of what you want to use. Are we only using USDC? I assume.
You can use whichever one you have available to use. That's the thing. Once you get more comfortable, you get surgical with it. You know how to switch it in, switch it out, because you can do anything however you want to do it. Like, and I mean that literally. Like with this technology, you can make your own money out of thin air. Like I'm showing you how to get somebody else money out of thin air with this, but you can make your own money. I think I told you. Remember, you can make juice token.
I ain't heard.
Right, yeah, you did.
Juice token.
You said what?
Yeah, juice.
Yeah, same thing I told you. You can make Mobiz coin.
Oh, you said okay. Yeah.
That's what I want people to get from this, like how you can actually do this and change the financial trajectory. Like numbers don't lie, but they can. This was just at 40,000 when we got on the call. Y'all see that, right?
Right.
Right, but nobody sees the actual mechanics. They just see the big number. Ooh, 40 G's. What's this? What's going on? You know, and this is still pretty easy, but somebody got to show it to you, break it down for you real quick, and then you off to the races. Just manage your account and stack the money. That's it. Manage your account and stack the money. All right, any other questions?
Yeah, well, not a question, more of a request for next week. If we can talk about the animal, the elephant in the room, which is, to me, when you take money and you put it into your bank account or your cards, Uncle Sam is going to see that number sooner or later with everything that's going on.
Martinez.
I'm having a problem with California right now, and I'm afraid it's gonna spill over to all the other states.
Okay, let's watch this. Let's see this. I got I got 100 wealth class tokens right now. I got 200 wealth class tokens, matter of fact. 200 wealth class tokens for the first person that comments in the classroom and tells me, how can Martinez avoid concerns when he wants to cash out his cryptocurrency? First person to comment in the classroom, how he can avoid worrying about those issues of cashing out when he spent his money.
Okay, well, is Manny.
Go ahead.
Well, the way I do it is
Don't say it, Manny. Don't say it. This is a learning lesson. This is a learning lesson right here. Text it to me.
Hey, what we writing it at?
In the classroom.
This announcement, something to your class?
Yeah, just comment on the class. Make your own post in the stream. Go ahead. First person, like this is very important, that question that Martinez asked, right? Because a lot of people that actually have a nice, income coming in, right? Somebody's going to see that. So personally, I don't have income, right? Like all of the payments that I get from y'all, the way I actually receive it, they turn into donations. Everything I'm doing is considered gifting when I touch it. But that's why the answer's in the classroom too, Martinez, to actually what you need. It's in the classroom.
I'll keep searching.
Yep. Look under create accounts. There go your clue right there. Look under create accounts. I know it's in there. I just seen it. And look, and the referral link's in there. But just so everybody on the same page, because I'm going to go over this anyway, but just not to overwhelm people with information. Using this strategy, you can make tax exempt transaction. You can make tax excluded transaction. You can make tax deductible transaction, right? Once you understand, it's not what you do, it's how you do it. You probably got to read the revenue code a little bit. Most people don't like to read, which is the disadvantage. But if you actually read what the IRS says, you go use their words against them and you play the game. And everybody play the game differently. Y'all was just watching me play right now. And I'm about to, I'm coming with y'all. So we're going to just come and space jam this thing. Any other questions? Okay, we don't got no questions. If anybody got anything, just post it in the classroom. All right. It's a loan, no taxes. D Jones, that's incorrect. That's incorrect. That's not the part. But those are facts. Not saying that you're not stating facts. These are loans and there are no taxes. But he's talking about, Martinez, just so I'm clear, you're talking about when you send this crypto back to your debit card as fiat, right?
Yeah, if you're going to cash out and bring it back to your bank account, it's going to come back as cash.
Okay, so now that does go partly to what D. Jones said. It's a loan. So you don't have to pay taxes on debt. That's one thing. However, you still have to make your transaction and they can see the money getting spent. So to avoid that, there is an actual solution. And it's not just simply the fact that it's a loan and you don't pay taxes on the borrowed money.
But would you not be?
Go ahead.
Would you not be responsible for like capital gain if you're loaning out money? Now you're getting paid on interest. Don't you?
Of course not.
Still got to be reporting that.
Who's reporting who to what, where, how?
No, not now. I'm saying in the future, the government is going to want to take over this.
But they can't though. That's the whole thing. They can't.
I'll give an example. Right now, I got my issue with California. I opened a business in 2018. They're looking for taxes for 2020. I'm like, what taxes are we talking about? Sales tax have been, filed and remitted. He said, no, we're not talking about sales tax. We're talking about you earning business in the state of California. you got to pay us taxes on your income. I'm like, what? And
Oh wait,
sure enough,
you talking about yourself personally?
yeah.
Man, Martinez, stop that, man.
Like I
Look,
said, I
I'm
hate when the government is trying to squeeze you for every nickel and dime you try to earn.
So this is what you do. You squeeze them out of every nickel and dime. Hence, billion-dollar companies and billionaires can get zero tax bills. You know why? Aside from business.
Donations.
Exactly. They give the money away to themselves. That's why I just said the money that I use for making the business, I give it to myself as a gift, and then I give it to my other, assets. But with your situation, you just need some structuring, really. If you structure your business and your transactions differently, you can get more tax credits, more deductions, but then you'll also get to, apply more of the exclusions and exemptions that come from somebody that's running a business.
We got beaches in Texas. Texas is a lot more business friendly.
Yeah, it is. And for workers too, though, because they don't take the taxes.
Right. No state income tax.
I'm about to move back to Texas for a little while. I used to love Texas. I had my first job in Texas at Kids Foot Locker. Yeah, I missed that job. That's when job was good for me. Well, I got to get the shoes and the girls. It was good. All right. So if ain't no more questions right now, I'm going to get to these calls. I appreciate y'all support, and I'm out of here. Thanks again, y'all.
Enjoy your weekend, guys and ladies.
All right.